Good evening, everybody. This is Mark Lambert of Theta's Pendulum Trading Group. It's June 22nd. It's after the market closed. I'm just going to go over a couple trades today and setups that were pretty much sticking themselves out to me. And I'm going to start off with the more mundane stuff, and then I'm going to move on to some musical ratios and basically projections that you should look for turning points in the market. All right, let's start off with the very basics first. Right now, I've shown these three charts on numerous occasions so far. Basically, these are all half charts. This is the hourlies. This is the 30-minute. And these are the 15s. They have a 20-period triangular moving average, which is seems to catch good swing trades that keep you in a trade for several hours to a few days at a time, which I've adopted. I've been using it for quite some time now, and I do like them. Also, the green moving average that you can see here, let me blow this up a little bit more right now. It's basically just a 3x3 displaced moving average, and basically when we open and close the bar below that one, it's usually setting a trend for the day, or at least for the foreseeable future at that point in time. Now I'm going to show how you could have caught this today by basically looking at the musical ratios. Okay, for that, I'm not going to use my Thinkorswim platform. These are, while I am on this page, these are the projections that I've been looking at right now. I believe this first wave up has a high probability of being done. My expectation is now that if we bounce, we will bounce to probably a lower high and then pull back. So I'm looking for this low to get breached. Even if the market opens up here tomorrow, I'm looking for this low to get breached before this high gets breached. And that's also using another form of analysis. But basically the first thing we do is we always measure that first wave. That first wave normally denotes all the timing and price projections that we're to expect during a move. And as the market reverses, it's also going to make a move down and then probably a lower high at this point. And that'll be our new first projection, where we can keep this grid active, but the one that we should be trading is a grid we're going to pull off of this, because chances are we'll probably end up with a confluence area where maybe like the 61.8 or something like that might be a 200% or 261.8 of the first inflection moving the other way. And that's an area that you should really target as really contemplating if you're short at the time to close out your shorts and possibly look for a bounce to go long. And like always, we always look for confirmation before jumping into a trade. The trend has been primarily up. It's been getting tired though over the last couple days, which doesn't necessarily mean it's not going to go any higher, but I think it is due for a correction at this point in time. And this correction started, I believe, this afternoon with this first secondary lower high. And the reason why I look at this as being a very important point is that it breached this prior swing low. It also breached this prior swing low. And it's basically been using this, if you go to a smaller time scale, this Fibonacci projection as levels to be playing off of. I'm fully expecting this is wave 1, wave 2, possibly wave 3 would be here. I'm looking for a wave 4 to maybe move sideways or maybe come up a little bit more, but not breach this low and then move back down lower again, at which point in time then we can have a decent correction upwards again. But one of the things that I really want to look at right now would be this right here, which is a vector analysis, which is something that we should do all day. I basically do it on if I'm intraday and if I'm swing trading. I basically look at the 60-minute, the 15-minute, and the 5-minute time frames, and I pull vectors off of alternating swings. What I mean by an alternating swing would be I would look at vectors from this to this, or in most cases adjacent swings, which would be this one compared to this one. And I would look at that on the 60-minute time frame, the 15-minute time frame, and also the 5-minute time frame. You'll find that vectors are basically appearing at all of these time frames at one point or another. Of course, the more time that's involved, the stronger the move is going to end up being. But basically, this is off the 15-minute time frame right now at this point in time. And as you can see, we made a move down of 424 pips, and it took 160 bars, which I've entered into my Excel spreadsheet right here, which I've already shown this sheet on a couple of occasions. And if anybody ever wants this sheet, just send me an email to graceman4eva@yahoo.com, and I'll be glad to send it to you. Also, then I take this swing right here, which is basically, as you can see right here, off a dynamic trader, which was 368 pips, 400 bars. Basically, these are the ratios that I'm coming up with right now. This vector ratio, which takes both time and price into account, really is not showing me anything really strong at this point in time. Then at this point in time, one of the things that we want to do is just do the time bars, which is 160 and 400. We end up with a ratio of 400 and 2.5. 2.5 I want to explain in a couple seconds. And then also at the same time, we should also take a look at the points too, which is 424 points and 368 points, and get the ratios from there. Now these two ratios are not really sticking out to me either. Basically looking at everything from geometry to Fibonacci ratios to diatonic music theory and so on. So I'm going to go with this 2.5, which I've actually denoted on this chart right here. 2.5, you can almost look at this as up 2 octaves plus a sol note, or if you want to look at it in more of a ratio, this is 2 is to 1 plus 1 is to 2, which is basically almost like a sympathetic or harmonious relationship where the ratios are the same but in reverse, but they're augmenting each other. So this is basically the sol note. When you take a look at it, you can almost look at the swings. You can see a do, re, mi, fa, and then sol note, which reaches to today's high, which made an exact 2.5, which would be 2 octaves plus a sol note. So with something like that, and then you're also looking at the more mundane stuff, which would be basically moving averages and Fibonacci projections, that's something that should alert you that the market should turn, and this would have been a really good day trade. As you can see, it basically confirmed like a lower high on both the hourlies, the 30-minute chart, and also the 15-minute chart. And if you want to get down to even more specific areas, you can also look at the 5 minutes and so on. I mean, depending on what type of trader you are, if you're a scalper or if you try to take longer-term day trades. But basically, that's something that I would be looking at. When you see a ratio of 2.5 and it's an exact hit, and you're looking at this area right here, this is not 2.501, this is 2.5 exactly. That should really make you take notice to see what's going on. And with that said, I hope that this stuff is helping you traders. Basically, myself and Tony, we enjoy sharing what we know with other traders. And at the same time, it's also a learning experience for us too, because a lot of times we get into analysis that is a little bit more esoteric than most people look at. And sometimes I guess we can overlook the more simple stuff. So, visit our group, and, we hope you enjoy it. We hope it's a learning experience for everybody. And with that said, Godspeed, God bless, and good trading to you.